No big bang tax reforms, no populist announcement, no appeasement of any section of the society. Undoubtedly, this year's budget is focused on revitalizing the Indian economy after a pandemic hit situation. The earlier measures like digitization of the tax compliances and digitization of the financial transaction, etc., is yielded good results. This year's GST collection is standing at, on an average for last 9 months, about 1,30,000 crores. And last month it was exceeded 1,40,000 crores. The customs revenue is also above the budget estimate. Customs and GST revenue is grown beyond the budget estimate by almost about 30%. So whatever reforms have been undertaken by the government is started showing results. The new challenge before the government is how to reignite the Indian economy hit by the pandemic. So essentially the focus is on capital expenditure. The capital expenditure mainly aimed at creating employment, creating manufacturing facilities across India, promoting infrastructure, and digitize the transactions, fintech as well as the compliances through the latest technology. The different projects which is announced in the budget is actually would see through the challenge of creating employment and creating demand and consumption, and that would fire up the economy to reach the 9% or the double-digit growth which we are looking at. As far as the indirect taxes are concerned or income tax is concerned, there is no any big bang amendments or changes. Essentially, from the GST perspective, certain decisions of the GST Council has been implemented in the current budget through amendment. For example, the interest is leviable only on the net tax liability, not the gross tax liability. And there are concessions with respect to claiming of input credit or issuing credit notes, etc. The September deadline is extended by 2 months. So, and other than that, as far as there are certain provisions with respect to availing credit in cases where the supplier is claimed credit or not paid the taxes as required under the law, then the GST authorities can block your credit as you are the buyer from those suppliers. So it is mainly making the people, the buyer and the seller equally liable for any kind of lapses or any kind of evasion that might have happened. From the customs point of view, there are number of exemptions which is already become redundant, has been abolished. Some of them which has been shifted as the tariff rate, where effective rate and was not changed for years together. And there are certain cases the new exemptions have been incorporated. Essentially, the thrust of the customs amendment is to promote the manufacturing in India and discourage the import, especially of capital goods, into India. Overall, the budget is very progressive. It would for sure ignite consumption and production in India, create employment, and it is the right prescription under the given circumstances. Thank you.